Would you like to start investing into the stock market as well? You see them growing every day, but if you are not investing and you have your money on your bank account with minimal interest, it's not growing at all. Well, you're in the right place. I'm here making a video to talk you through what is an investment plan. An investment plan whereby I'm going to talk through a number of questions that you should really ask yourself in terms of what is your investment objective, what kind of strategies you can apply, what kind of instruments you can invest in. These are really key for you to think through before you just blindly start investing. Well, I'm going to take you through it through my own examples. I will be explaining the questions through what I've done in the past, and thereby it becomes easier for you to understand how you can apply and create your own strategy. Okay, let's get started. So before we start diving into the investment plan, I want to show you some performances of the indexes for which I made some screenshots in the beginning of the week. Why am I showing you this? Well, just to showcase what kind of performance an index investment could have been in the last year or in the last 5 years. So if we go to this overview, I created some screenshots at the beginning of this week about the performance of known indexes. One of them is the FTSE 100, the SMI, the CAC 40, the DAX, the AEX, the S&P 500, the Nasdaq, the SSE. So I'll be talking you through basically what kind of performance each of these indexes have performed over time, over the last 5 years. So first of all, you can see the FTSE 100. There you would have invested a year ago and you would have had a return of 13%. If you would have done that in the last 5 years, you would have had 18% performance. Well, if we go to the Swiss market, you would have a return of something similar, 13%. In the last 5 years, 15%. So that's not that fantastic for 5 years. If you look at the French CAC 40, that would have earned you 5% in the last year, which is not that much. 35% over the last 5 years. So that's quite reasonable for 5 years performance. If you go to the German DAX, then you can see that, well, maybe in the last year you should have invested in the DAX because the DAX went up with 32%. The DAX went up in the last 5 years with 66%. That meant that if you would have invested 5 years ago $1,000, you would have now had close to $1,700 or euro. If we go to the AEX, the Dutch index, well, there you can see a performance around 11% in the last year with 53% in the last 5 years. Now that we're reaching the US, the Nasdaq and the S&P, you can start seeing completely different numbers as well, especially in the last 5 years. Here you can see that the Nasdaq had a performance of 26% in the last year and 134% in the last 5 years. That's quite a good return, I would say. And if you look at the S&P 500, 23% in the last year, not bad, and 83% in the last 5 years. Then finally, we also look at the SSE, the China index, and there you could have had 13% in the last year. But if you look in the last 5 years, you would have made a loss. You would have had a loss of around 10%. So you can see that the performance over the different indexes are quite different. And in general, I would say the best bet is to put your money in the S&P 500 or in the Nasdaq, because just looking at the numbers of return, it's the most appealing indexes in my eyes for the next coming years as well. On your left here, you can see a number of questions that I will be asking myself. I'll be explaining you my own personal investment plan so that it becomes clearer for you for each of these questions how you can interpret these. This is of course not set in stone. This is something that evolves over time. I can change my mind over time and have a slightly different strategy. But this is something that is important to just think through before you get started. So the first question is an important one. What is my investment objective? Well, my objective of investing is the following. I would like to become financially independent at some point. Obviously, this is something that does not grow over time, but along the way I'm aiming to grow a portfolio that basically covers my daily cost in groceries, in my rent and in my living cost. And that's something that I believe is achievable if I grow my portfolio with an average growth of around 10% or more per year. This of course takes time, but I have time and I enjoy actually learning how to invest and how to play with the market and to see my portfolio grow. The second question is, what is my investment strategy? And this is linked to my monthly savings, my current risk appetite, and the types of industry I want to invest in. On the monthly savings, I have a monthly income and also I have my monthly cost. If I subtract them from each other, there are my savings. And from my savings, I put around 1,000 Swiss francs every month on my brokerage account so that I can reinvest this. I try to make sure that I always have enough on my bank account to at least cover my cost for the next half year in terms of rent, of groceries or any unforeseen cost, so that I can always have that ready whenever I want to. In terms of my risk appetite, I can cluster myself under the following three categories: a low risk, a medium risk and a high risk. And I can say that lately my portfolio starts to look like 20 to 30% ETFs and around 70 to 80% shares. So I cluster myself under a high risk appetite. However, for beginners, I really strongly recommend that either you start completely with ETFs, with index ETFs, and start off and learn from that. Along the way, you learn more and you start having a couple of shares that you like to invest as well in, and then you start adding them, and then you basically lower the ratio of your ETFs and the number of shares. Strongly recommend, especially for beginners, to not go further than the medium risk, whereby you have a balanced portfolio of ETFs and shares. However, but if you grow over time and you start to become more confident and have a stronger mind of what kind of shares you want to invest in, you can of course unsettle that balance. In terms of risk appetite, I set certain stop loss limits. These are orders that I can set into my brokerage account for each position, that if it drops, if something happens in the market and my position would suddenly lose a lot of value, I can say I can cap my loss and I will set my stop loss, let's say under 5 or 10% under my position that I bought it for. And thereby, if there is a crash, there is always a certain escape route, or not an escape route, it's basically my safety net that I'm not losing my entire portfolio. So creating stop loss limits is very important. Another thing that I do is still create a mixed portfolio. A mixed portfolio just lowers the risk that something goes wrong in one of your shares or one of your ETFs, but in the meantime you have multiple. So you have multiple baskets from where you are actually investing in, and that's just spreading your risk, and I believe is a good strategy to against any risk. In terms of what types of industry I invest in, well, normally I invest in companies and ETFs that show a significant growth, that have a huge potential in growing further, and have potentially also dividend. And to look at the different industries, that can be AI tech, semiconductors, the energy industry, pharma, insurance industry, fintech, sports and retail, quantum computing, real estate, and defense industry. These are all areas whereby I believe in the near future, in the next coming years, there's much further growth expected, and I hope I can get a bit of profit out of that and thereby grow my portfolio. So the third question is cryptocurrency part of your investment portfolio? And in all honesty, it isn't. I don't have any shares or ETFs related yet. However, I am lately seeing more and more interest in having ETFs, especially with the new American administration with Trump, more and more in favor of Bitcoin and banks adopting that as well. So I am considering to potentially go and invest some ETFs related to cryptocurrency, and I see that also that my broker, the Giro, is having a wide range of cryptocurrency ETFs. So this is something that is not the case yet, but I think in the near future I might add some ETFs to my brokerage account. So the fourth question is, which broker are you using? Well, I have been using already quite some brokers. If I look at the last 20 years, I've used the Robeco, the Bing Bank and the Saxo, but lately I only have the Giro, where I have a Euro and a Swiss franc account. And basically the Giro is, in my case, and I think for many others as well, one of the most attractive broker because they have very competitive rates, very fair transaction cost. If you compare them to other brokers, they are one of the cheapest. They are an online broker, and you can basically open an account from close to all of the countries in Europe. I'll put a screenshot in the screen whereby you can see from which countries you can open an account for the Giro. And they have a very user-friendly portal. You can easily create your orders, you can plan your orders ahead, so you don't have to do it on the moment when something is happening. No, you can just set certain conditions, and when these conditions are happening, then the Giro will execute these orders for you in the market. If you are interested to open an account with the Giro, then I can recommend you the link in the comments. What will happen there, if you use that link, you will get a free amount of transaction cost. And this is of course very beneficial for you, but also that will help me because I will get some free transaction costs as well. So thereby we help each other. So please have a look at the link below in the comments. So the fifth question is, how liquid is my portfolio? And why do I ask this question? Well, it's important to know that if you need your money out of your investments, that how quickly can you convert them from your instruments that you have a position in to actually cash and have that on your bank account again. And this is something that obviously can be rather important. In this case, in the Giro, I can close any of my instruments within a day. Whenever the market is open, I can close them. However, for the Giro, they tell you it takes 1 to 3 days. As long as you do the transaction or the request for withdrawal of your cash before 10 o'clock in the evening, it should be counting from that moment 1 to 3 days. In general, I would say it's 2 days, and then you have it on your bank account again. So the sixth question is, what is my trading horizon? My trading horizon, what I mean with that is, when do I think I'm gonna close my positions? And this is something that when you take a position, you should really start thinking it through. When would I like to close it? When do I would like to have my money back? Especially when do I think I can get this profit that I am aiming to get by investing in this particular company? In general, I would say the majority of my positions I take a mid to long term, and that means that I have a timeline of up to 2 to 24 months that I believe, okay, I'm willing to take a position for this kind of period. If I see significant growth in there and I think, hey, that is reaching my goal of what I want to achieve with it, I might close it earlier. There are cases that I buy something in the morning and during the day I can get such a nice profit that that basically I close the position within the day. Does that make me a day trader? Yes and no, but the majority I'm saying I'm a long-term investor. I invest for I see a long path of growth of the company and that's where I'm investing. Does that mean that I occasionally have shares that I keep longer than 2 years? Well, occasionally as well, but majority of them I will close them between 2 to 24 months and yeah, that's my trading horizon. So the seventh question is, what kind of investment instruments will I be using or am I using? Well, in my case, I am using mostly shares and ETFs. And this is where I find a nice balance between picking some stocks, some companies that I really like, and using a basket of different industry with ETFs. In the past, I've used some covered calls, and I've used also some corporate bonds in the past. But in general, my portfolio looks like shares and ETFs mostly. The eighth question is, in which currency am I trading? Well, if I look at my portfolio, I am mostly investing in US shares in the Nasdaq and the S&P 500. So I'm exposed to the US dollar, but I'm also trading in euro and in Swiss francs. The Giro basically converts my euro balance from which I buy US stocks. And this is where basically this is the currency I am mostly exposed against. I quite often look at US stocks that are also listed in Europe, and then I buy them potentially also in Europe in Swiss francs, just because I don't want to have the FX exposure and not having the additional FX transaction cost. The ninth question is, how much time do I spend per week on following my portfolio? And I think that's in the range of 5 to 10 hours, I would say. And that comes down to 1 or 2 hours on a daily basis. And that's something that I think is quite manageable. I can do that in the morning. I can do that at the end of the day when the market, the US market is open and closing around 10 o'clock in the evening. And that fits pretty well in my schedule. I can also during the day, of course, just change and tweak my orders when I need to. And nowadays also the mobile app is working very well, that you can just quickly go in, change an order, delete an order, transfer some money. So that's something quickly done. In terms of how I spend my time, I've put down some bullet points here. So for instance, I like to see the opening, I like to see the closing of the market, to see how the market is moving. I like to read. I like to read some websites. I like to see if the market is moving in a particular direction. Why is that? What kind of news came out? What kind of websites? Well, Yahoo Finance, Bloomberg, Seeking Alpha, Motley Fools is very good. Also, if I want to see more and understand more about the company, I go to the company website. I read the report, the quarterly reports or the year report or the presentations that they provide to their investors. And what you can also do is just you can subscribe as an investor. So you can then sign up, you register your email, and then every time a company has any news to publish, you'll be the first to be informed. So that's something definitely that is interesting to follow up on. And obviously also the multimedia. If I walk or go for a stroll, then I sometimes listen to a podcast, or sometimes when I have a moment, I watch a YouTube from other content creators. And that's something that, I get a lot of ideas. You get new perspectives, you get ideas of new products to trade or new companies that you haven't heard of before. So yeah, that's easily how you fill 1 to 2 hours per day. The 10th question is, will this affect your daily mood? Well, emotions normally are not a good recipe for investing. And this is where normally you should try to take a step back, zoom out, and sometimes before you react on any of big movements in the market, think it through. Sleep a night over it before you really make drastic changes. Normally, it's best to just react in a non-emotional way, because putting your emotions into play is sometimes not, or sometimes is often a bad recipe. Obviously, I'm a human as well, and if I see that my portfolio is growing tremendously and I have good profits, I'm very happy, and I'm happy to celebrate that with my family or friends, or treat myself. And this is something that I believe is also important, that you celebrate your wins, and even though the profit might be little, or you just close the position with the profit, that you just celebrate this, and this is something that is important to do, but try to switch that off. So I'm saying, will this affect your daily mood? In my case, yes, but I try to switch it off, because that's very important. Obviously, when there are bad market days and everything goes down, funny enough, at these moments, I'm not willing to spend any money. And this is where I am just doing my daily groceries, but I'm not paying any new purchases or whatsoever. But when the market goes well and I see that I just closed the position and I have made some money, this is where I'm quite often also in the mood to actually just buy something nice. So the last question, but not the least question, is an important one. What are your investment rules? So this is where you need to set up your own rules. And obviously this is not set in stone, you can change that over time, but this is something that is important to think through. I'll take you through my own one by one. So the first one that you can see is, I want to buy growth stocks that and dividend stocks that grow over time. And this is where I'm looking for those companies that basically tick that box, that I believe have a huge potential to grow in the next coming months or year or so. And I'm sometimes willing to wait 1 or 2 years for that. And this is why I'm a long-term investor. I try to, as one of the other rules that I have, is to have a mixed portfolio. I don't have just one particular industry that I invest in. I have to say, lately my portfolio is more and more into AI, tech, and robotics, and semiconductors. But I try to spread that out as good as possible, so that I lower my risk to a certain extent. I try to switch off my emotions, as I said in my previous questions. Not always possible, but I try to, especially in my investment strategy, try to be as objective as possible. And I know that profits in the past cannot be guaranteed also in the near future. But that's something, obviously, you need to take your emotions into account, and you need to keep them under control. Another thing is, let the money work for you. Well, ideally, you find your portfolio that basically, in my case, can just grow over time, gives you dividend over time, and you don't have to do much about it. You just keep an eye on it, see how that is evolving over time, and when all goes well, your portfolio grows. Another thing that is important is to maintain your stop loss limits. And this is something that, as long as the share or the ETF grows over time, you don't want to lose your profit that you have gained in the last previous months. So what you want to do is that you basically set your stop loss to a certain level, let's say 5 or 10% of the current price, so that in case it falls, there is a market correction, you don't lose the entire profit. And this is something that is rather important, that you set your stop loss limits and that you maintain them along the growth of the different instruments that you're using. Another thing that I really agree fully with is a quote from Warren Buffett, and it basically says, be fearful when others are greedy and greedy when others are fearful. And that basically means that when there is a market correction, that's the moment to buy. This is where you need to make sure that you have some money on the side that you can invest. So when the market crashes, obviously there might be affecting your current portfolio, but it's also a great opportunity to buy stocks and ETFs and shares with a discount. And obviously when the market goes well and there's no end of going well, in that sense, be also a bit cautious. Be cautious that there can be a setback, there can be news over the weekend that suddenly changes everything and that changes the portfolio and the performance. So this is where setting limits is very important. Another thing is when you receive invested dividend, then reinvest that. And also when you close a position and you have a profit, I try to reinvest that into other shares or ETFs where I can create a profit. And this is exactly by reinvesting your dividends and your profits. This is where your investment portfolio starts to grow over time. And this is something that, this is one of the crucial things to do if you want to grow a portfolio to new heights. So these were the 11 questions that I believe are relevant to just think through before you start investing. And this is something that obviously this is my perspective of how I see it and what I want to achieve. This might be different for you. And I'm very curious to hear your comments or to see your comments and to see your questions that you might have. Feel free to drop them in the comments of this video. I'm very eager to reply on them, and I'm eager to see you start investing as well. So in this video, we started off with going through all the different indexes and the different performance they have over a period of 1 to 5 years. Next, we followed in a section whereby we were talking about an investment plan and a number of questions you should be asking yourself to just figure out how does your investment plan should look like. And next, in the last phase, we would like to take you through an investment plan in terms of numbers, creating a spreadsheet whereby your initial investment and your monthly deposit is added up and seeing how your profit per year can have a compounding effect. Compounding growth is a magical concept in investing, especially if you want to grow your portfolio over time and you reinvest your profit on a yearly basis in the following year. In this example, I'm going to take you through an example calculation with this spreadsheet, how this would result into what kind of balance you have after 10 or 20 or 30 years. Especially for the younger generation, that might be very relevant. If you start early, how big the effect is if you start early. But also for the older beginners, the generation that might want to still invest, what can be achieved in just 10 years. So in this case, I'm gonna make an example whereby the initial investment is €1,000. If we decide to put 200 from our savings on a monthly basis in, and we do that on a consistent way. So every month we put this in. And with the initial video, we could already see that the growth in an index is potential and very likely to achieve 10% per year. So now you can start seeing a curve here on the right. And this curve is growing stronger and stronger over time. And that means that the profit is each year being reinvested. And therefore, the effect over time, the longer you do it, is much stronger. I believe even when investing and you're keen on saving, that your savings can even go a bit higher. If you put aside around €500 on a monthly basis, on a consistent way, then after 10 years, there's an enormous amount already on your account. More than 100,000 in just 10 years is amazing. What is even more amazing is if you look further than just 10 years. if you would continue to save in this pace, and then you would expect that over time you earn more, your salary grows, that your savings might even increase over time. But let's just stick to the example whereby we're putting 500 on average in the next coming 10, 20, 30 years in. And see what the effect is. Well, if you put on 30 years in a row this kind of amount of putting 500 aside in your investing and you reinvest it, well, by that time you can become a millionaire.